The Capital has joined in. Morning, Sandeep. What do you think? Is this run done at 5,900, or do you see a whole lot more upside over the next couple of months?
Oil, we have recommended at 5,900 levels actually to take profits in the market and actually raise cash. I think it's really the only rational thing to do in terms of managing risk. Because I mean, the real reason why the market has actually ignored the movement in crude prices, one is of course that the trade deficit has been falling, and to that extent the impact on the current deficit is limited. Two, the fact that the dollar has been weakening every day, and therefore the rupee has been strengthening, and therefore the higher crude prices haven't meant that much higher cost for India for importing. And of course the third and obviously the most important reason is that transmission of higher crude prices through the Indian economy will perhaps only happen after the state elections. But then you might not just see a petrol price hike, but you might also see a a diesel price hike. So in this environment, the only thing to do is actually to raise some cash and actually brace yourself and hope that crude stabilizes sometime soon.
If you're raising cash at these levels, what is it that you expect to see by way of a retracement or a cut for this market?
Well, I think that a pullback to maybe 54 to 5600 levels I think is always possible. I think it's also important to remember that the money that's actually been coming in is what a lot of people tend to call dumb money, which is ETF money. But it's not really dumb. It's just that it doesn't think. If there's money put into ETF funds, that money just comes in and buys stocks. Whereas if money were to come into, say, an emerging market fund, or even an India dedicated fund, or even a global fund which is investing in India, they might pick and choose their stocks, and some of them might even choose the timing of what to buy. But an ETF obviously doesn't do that. Of course, I mean, if I'm raising 30% cash and discuss the obvious factors, which is inflation, interest rates, investment, infrastructure. Now, there hasn't been any dramatically strong news, negative news on interest rates or even on inflation. Of course, inflation could get substantially worse, but we'll have to watch that. There's been not much of a movement either in terms of investments or in infrastructure. But having said that, so there is a sort of a status quo, and we haven't seen any new major scams break out. But I think that risk is always there, and it also tends to happen is that when the money flow is strong, all of us get lulled into believing that the market has priced everything in and it's all in the price because the money flows are so strong. I'm not saying that, that's not the case, but what I'm saying is that the money flow can tend to actually, alter our perceptions dramatically. And, we all know that ETF money could actually turn on a dime. So at this stage, the only call that you can take is that a correction to 54 to 5600 is possible. And it would make sense, purely from a risk management perspective to raise some cash.